Good morning, everybody, and welcome to the Prosperity Through Multifamily Real Estate Investing podcast. As always, I am your host, Real Estate Cody, and with me, Mr. Coffee Connoisseur himself, Brian Alfaro. Brian, we were just talking before the show. We both need a cup of coffee. Good morning. How are you?
Good morning, Cody. I'm doing really well. I've actually already had my cup of coffee, so I think I'm good. I think it's you who need one.
Yes, I'm lagging this morning. You're definitely right about that. So, you still owe me that cup of black coffee from Black Cost Coffee.
I do. I'll have to get you one sometime in the very near future.
All right, I'm gonna hold you to it. I'm gonna hold you to it. Well, Brian, I'm excited for this morning, man. This is kind of an extension to a previous episode we just did a couple of weeks ago, titled "The Six-Step Framework to Raising $1 Million." And we put that episode out, and we got a lot of good feedback. A lot of people were very interested and engaged in that conversation. I think a lot of people who are interested in raising capital really want to know what's the secret sauce, right? But one of the most common follow-up questions we got after that episode was, okay, but what's the script? How do you connect with investors? So this is hope we can dive in today and talk to you. What do you think?
Yeah, I think that's a great follow-up episode to the one we got some great feedback on. And it's a question we definitely get very commonly. So I'm looking forward to diving into this and hopefully adding some more value to all of our listeners.
Yeah, man. Likewise, likewise. And it's fun. I know we've talked to, man, thousands of people now, and we have a pretty extensive database now, and a lot of these conversations are kind of just based off of things we're going to discuss today. And spoiler alert, there's no secret sauce here, right? There's no there's no secret formula to follow when you're having these conversations. And I think it's important for people to remember that you're dealing with people, right? In your relationship business, right? In relationship interactions and such. And so it's really about getting that engagement and finding that common alignment of interest, whether that be in life or whether that be in business. But is this somebody that you really want to continue networking with and connecting with? What do you think?
I agree with that 100%. I mean, when I get the question, what's the script? The thing that sort of alarms me when I hear that is it almost comes off transactional, right? So it's like you're a robot, hello, my name is Cody. I have real estate. It's like of course, there are some things, and we're going to talk about all that today. Some questions you definitely want to make sure you get answered. But to go in an exact order and be robotic about it, I think it's not our approach to it. I'm not saying it's right or wrong. Maybe there are some operators out there that do that and have a lot of success. And shoot, maybe there's some personalities out there. Maybe the engineers out there really like the more let's get straight to the point. Let's talk about the meat and potatoes type questions. But at the end of the day, I know you and I, we lean heavily on relationships first. So we definitely are looking to build rapport and to make sure that not only are our investing thesis match with them, but the other way around too. We want to make sure that they're the right investor for us and we're the right company for them to place their capital. So all that stuff's really important to us.
Yeah, that's a very good point, right? Because it's a two-way relationship. It's not about, you can't just look at it from the aspect of how is it going to benefit you, but are you a benefit to them as an investor? Are you a fit for them? That's a great point. But when I think about it, I think about it like what are those credit card customer service lines, right? Where you call and like there's already a generic plug, right, that they give you and it goes down the script and blah, blah, blah. That's what I think about it, right? It's a big turnoff, right? You just don't want to have those conversations. And I think that I'm hoping that after today's conversation, we can help shed some light on how do you have these conversations, right? And I think you can't go in overthinking it. You can't go over and making it a bigger conversation than what it really needs to be, right?
Yeah, I definitely agree. I think a lot of newer or first time investors, and I remember probably being in this spot not too long ago, to be honest, you get like the sweaty palms and you get kind of nervous. And, you got to be confident. You got to go in and you obviously want to be educated, so know what you're talking about. And we want to be able to have the answer to all the questions that may get asked, or at least be able to provide the resource after the call if they have a particular question on something maybe you've done in the past, or if you have a blog or an article you want to send or anything. But I definitely agree with the points you're making so far, Cody.
Yeah, yeah. Well, let's dive in, man. Let's kind of talk about that. So, we're connecting with investors for the first time. We're trying to identify if this is somebody that, we're going to stay connected with, or that's a good fit for us, like you said. What's the icebreaker? How do we break through that conversation and, just really get somebody engaged into having that conversation, that initial conversation? What do you do?
Yeah, I mean, for me personally, I think one of the first questions I like to get answered is, what is their background and experience with real estate investing? We're gonna go through the normal stuff. We're gonna make some small talk, especially if there's some common. I like to try to find some common connections with the other person on the front end. Before even, it's not like they pick up the phone and I'm like, hey, my name's Brian. All right, tell me about your real estate experience. Although again, maybe there's nothing wrong with that, but we try to find some commonality and some connections. So we might spend a few minutes just talking about their background, because even though it might seem like on the outside looking in, maybe like a waste of time to talk about, their background, where they're from, where they live, what they do for a living. Those are all really important details that you want to get on the front end to build rapport, so that you might find a common connection. Like if you pick up the phone, Cody, or make a call and you find out that somebody's in the medical field, boom, right? You're in the medical field, you have a common connection there. Or if I talk to somebody and find out they're in the hospitality background and they own hotels or restaurants or different things, like boom, common connection there, right? And people like talking to other people that they have a common connection with, and it makes the conversation that so much more fluid. So I would say for me, definitely one of the first things is just trying to, I like to ask people for their elevator pitch, not literally, but just kind of tell me a little bit more about your background. And some people go into more detail than others, which is totally fine. They want to tell you about their kids and the names of their kids and the names of their dogs and stuff like that, but which is totally fine. And then some people get straight into the, the meat and potatoes, so to speak, and start telling you about their real estate background, which is really, I would say, the 1B question after that slight, few minutes of rapport building. I like to, ask, okay, tell me about your investing background. Tell me about your real estate experience, because all the other questions that sort of come after this, or the details that come after this, can get real technical real quick, at least if you're new, right? When you start talking about asset classes and, return expectations and waterfalls and risk profiles and, different things that sort of get a little technical, if they have never invested in real estate and they've only invested in REITs or, stocks or bonds and different types of asset classes, you're going to be talking to a wall. You're going to sound intelligent, but they're going to be really confused, and you don't want somebody to be confused. So if you need to explain what is syndication, what exactly are we doing, then that question, getting that background and, their previous experience in investing, that's really what you need to know before you dive any deeper. And it just makes it so much easier.
Yeah, no, definitely agree. And obviously that's one of the most fundamental things that we're trying to discover, right? Is how sophisticated or educated is this particular person? Because as you mentioned, that's going to tell us how much nurturing we're actually going to be doing, right? And that's okay. That's all right. That's, we come across new investors into the space all the time, but it definitely dictates the type of conversation you're going to have and the flow of the conversation.
Yep.
And going back to your point about the icebreaker, I think it's important to establish some type of commonality, like you said, because that's what removes that transactional barrier. If you get into the call and you're immediately like, great, tell me what you've done in real estate so much, it definitely takes the personable approach out of it, right?
Sure.
And so I think you have to establish that framework. Now you have to set boundaries. Like you said, you don't want to spend those 30 minutes talking about, the grandchildren and the brothers and sisters and the dogs, all that stuff. But yeah, you got to.
Yeah, I think it's important to set the expectation. I know this is one of the points in Hunter Thompson's book, is he tells people like, look, I've got 30 minutes for you, right? Sort of set that scarcity mentality a little bit. And it's true. I mean, we were just talking about that before we got on this call, right? Like yesterday, between like 2 and 5 o'clock, I had like back to back calls, just back to back. So it's not that I'm trying to rush you, but we're all busy. We've got a lot of people to talk to. We've got our business to operate. So we do need to sort of set a time expectation and keep ourselves in check more than anything. Because I know you and I are both chatty cats. So we got to make sure we stay in check.
Maybe I am. It's okay. That's why people like Blue Oak Capital, man. They
Sure,
can talk.
you're right.
But no, hey, I'm glad you brought that up. I was going to bring it up later in the episode because that was a mindset shift for me, is understanding that you're coming from a position of offering something of value, right? And that's the premise is you are the one that has something of value, and that is your real estate experience, your time and knowledge, and the opportunity to connect with you and build that relationship, right? So you're in the position of something of value, and it's a very powerful lever when you can use that in these conversations. And I had a hard time wrapping my head around. Look, I'm a Southern boy. I'm from Louisiana. We talk. It's rude to cut people off. You don't do that, right? And so I approached my business that way. But when you have that shift and you understand when you put a value on your time and people identify that, they're going to take that more seriously, right?
100%. That mindset shift. If you're an active investor and you're listening and you're trying to attract, raise capital, whatever term you want to use, you have to have that mindset shift that on the conversation, there's two people on the phone and you both have something of value. You shouldn't ever feel like you're begging for capital or, you're in a desperate situation. Hopefully the other person has the capital, right? That's super valuable. It's hard-earned money, and we don't take that lightly. We're fiduciaries of our investors' capital. We're gonna do everything we can to not only not lose it, but to multiply, right? You can't take that lightheartedly. But at the same time, you're the one with the deal, which is super valuable to them, right? These are busy professionals that don't have the time to be cold calling sellers, sending emails, sending texts, spending 18, 24 months building relationships with brokers before they even give you a shot to get an investing final or getting a deal, right? That's why they need to talk to you. So don't take that for granted as well, that you're putting in the time, you're putting in the effort, you're putting in the sweat equity. And of course, you're going to ideally put in some of your own capital as well. So everybody's got something at risk on the table. So you're right. You're providing a service for other people that they need if they're looking to diversify their investment portfolio. And that is a total mindset shift. When you get on a call, gives you that confidence to know that you have something of value.
Yeah, absolutely. For example, I kind of think about like the podcast, right? Like we have a schedule in which we record a specific day, specific time. Most people know that routine, right? But what do you do when you have that high profile guest, the big influencers in the space and they want to come on your show? If that time frame doesn't work for you, you're going to value that time, right? You're going to make that accommodation because you appreciate the limited amount of time they have, which makes it even more valuable. So you have to take that same scarcity mindset, same approach. Absolutely. Because your time is very valuable. And as much as we would love to talk to everybody for 2 hours, it's going to only prohibit you from moving on and doing other things in your business. So setting those boundaries, those timeframes are absolutely important, man. I like that conversation. And I'll tell you, it really, really works. It does work. And it definitely helps keep things moving along. So, and here's the thing is, you're not going to get through the script that we're going to continue to talk about today. You may not get through in one day or one conversation.
Yep.
And that's completely okay. You can have multiple conversations, right? But the point is again, you always want to keep the emphasis on the background of the person you're speaking with, but also the value in your time.
100%. So, and that's where, go back and listen to our previous episode when we were talking about, having systems in the CRM, right? If you get to that point in the conversation and it's been such a great conversation, you're building awesome rapport with this person. You want to go meet them in person here in the near future, but you just didn't get all your questions answered. That's okay. You don't want that to be the norm because you're going to end up spending way more time than you maybe need to. You need to, train yourself a little bit better to get through them. But at the end of the day, you plug them in your CRM, you set a reminder. So like, hey, I need to follow up with this person in, 7 days, 14 days, whatever, and go back and circle back and get my questions answered.
Absolutely. Absolutely. And a lot of times they beat you to it, right?
That's right.
Before you get off the call, they've already got another one scheduled. And that's great. That's a good relationship. So awesome, man. So we've had the icebreaker. We've kind of set the boundary. We've put the value on our time. We've discussed, hey, what's the real estate experience? And particularly, I think you mentioned this too, right? I think you really want to get very granular when it comes to real estate experience. Okay. And if you're an apartment syndicator like us, you really want to find out, hey, is that investor, have they invested in private placements before, right? Do they understand the dynamics of being an LP in a apartment syndication deal, right? You want to try to get down to those nuts and bolts too, because again, that's going to dictate the conversation and where it needs to go. But next, leading into that is, and kind of piggyback right off that, is you really want to try to identify what is the core investing thesis, right? Who are they as an investor? in their philosophy, their investment philosophy, right? So are they an equity investor? Are they a cash flow investor? Do they have that high risk appetite? Are they maybe more risk adverse? You want to really, really figure out who this person is at the core, um, because ultimately it may not be in line with what you're doing and what your strategy is, but that's still okay. But you want to identify that up front so you're not wasting either your time or theirs.
Agreed, 100%. This is so important, Cody, because we say this all the time. You have to know your database, right? If you've got a database full of people that are, let's call them high risk, high reward type investors, you can go chasing those heavy value add, those C class properties, right? So because they align with your investing, your business is aligned with their investing thesis. If it's the opposite and you have an investor who's more of a, they want to play some capital in real estate for risk diversification, and they just want maybe steady eddy cash flow. They're looking for just some low yield. They want 6-7% cash on cash, and they really want to just park their money for 5 years and get some appreciation in a quality asset. They want to be in the light value add operational play, call it B minus, B plus, if not even A class space. You got to know that about your investors. So that's a really important question to ask is, tell me about your investing thesis. Tell me about your investing strategy. What type of return expectations are you expecting? And I think it's important because if you ask them, like, what type of properties do you want to invest in? Well, these are passive investors. So they may not necessarily understand the return profiles of let's call it a C minus, C plus reposition project versus a A minus, B plus type property. So it's better to say, in my opinion, what I like to ask is, tell me about your return expectations from, a cash on cash perspective, IRR perspective. What are you looking to do in those types of things? And you can sort of, once they answer that, you can get a better picture. Like if they tell you, they want 8, 9, 10%, you're like, all right, this is going to be a slightly higher risk play. At least in today's market cycle, you're likely looking at, some C product, maybe some B minus, depending on your ability to get those things under great contracts. But you really have to ask that question just so you can be in alignment. And what you may end up finding out, and this is not a bad thing, is their thesis doesn't match what you're doing, which is okay. It's not a waste of time, because sometimes you can then, that's a big thing in our business, right? We like to be connectors. We like to connect people. So if we find somebody that's like, well, man, I need 12, 13, 14%. I'm like, all right, we know some guys that are, doing some $20,000, $30,000 a door rehabs from full repositions. They're taking things that are, 0% occupied and putting people in them after a couple of years. Let's connect you with this operator, because they're going to, be able to push those really high cash on cash returns. And if it's the other way around, they're like, oh, look, this cannot be the riskiest part of my profile. Then let's connect you with the guys buying A class, somewhere in a really sexy, primary or secondary market. So you just got to make sure, and if you can't help them, that's okay. At least you get info, and you never know. You stay connected with them.
I 100% agree. And listen, there's something to be said about credibility when you can be resourceful, when you can connect people to others. And let me tell you, when it comes to that credibility, to have the confidence to tell an investor, hey, I may not be a fit for you, but I know somebody who is, and making that connection, that really rings true about who you are at your core when it comes to being a business owner and a relationship driven business entrepreneur, right? I mean,
we just want to help people accomplish their goals, right? I mean, that's what it's all about. So if we can help you accomplish your goals and get to where you want to get to, whether it's just financial freedom, you're hoping multifamily real estate investing can help set you free from your W-2. If I'm not the operator who can help you get there, I'm not going to stand in your way. Let's see if we can connect you with somebody who can.
Yep, absolutely. And listen, you never know. We've seen this often, right? Some of those guys come back. Some of those investors, you still continue to nurture the relationship. I mean, how many people have told us, hey, I'm not going to invest with you guys, or maybe I'm not interested, but we still keep them in our database. We still keep them engaged. Maybe sometimes they still tune into our thought leadership platforms. But there's a lot of those people that still want to connect with you because they like you, the individual.
Sure.
And this is all about timing, right? And people's strategies change over time, right? Maybe their circumstance changes, and maybe they want to add another part of their portfolio, or maybe they're looking for a new diversified alternative to what they're doing. So the important thing is you continue to build the relationship and you let it nurture and fester organically over time. And a lot of times those come back. And that's a pretty cool feeling when you see that.
Absolutely. I mean, there's that cheesy saying, what goes around comes around, right? Or karma, or whatever you want to call it. But I'm a firm believer in that, right? So you do someone a solid, you do them a favor, that operator you connect them with might ask you to partner in a deal one day, right? Or that investor who doesn't invest with you might connect you to one of their other, friends, family members, somebody in their social circle who would be a perfect fit for your investing thesis. So you might end up picking up another investor out of it. Or at the end of the day, you just build a good connection. You have somebody, that you see at your meetup, they're listening to your podcast, and you just have a great relationship, and there's nothing wrong with that either.
Yeah, completely agree, man. Completely agree. So, man, we wrapped in a whole bunch right there. We just talked about the core investing thesis, trying to figure out what is the strategy, what's the risk appetite, what's the return expectation. I think the next important factor that you really need to try to identify is, are they accredited or are they sophisticated? Okay, and this is going to be huge because this is going to, help you label and identify who they are in your database. Because if you're only doing 506Cs and this is a sophisticated investor, again, it may not be that same alignment, right? And vice versa. And so you really want to identify that early on and make sure that you have that label, because as you do have deals come available, you don't want to waste people's time sending an accredited investor, or excuse me, a sophisticated investor, a 506C offering every day, right? It's just going to get them frustrated. So it's important to really drill down into that and identify. And I think people are uncomfortable with asking the question, right? Sometimes I think if for some reason there's a barrier in asking, hey, tell me about your position, what's your net worth, what's your liquidity. But those are questions that you have to get comfortable with asking. And I think any intelligent or sophisticated investor in the space, they understand that comes along with the territory. And I've never gotten any kickback from asking that question. What about you?
No, neither have I. I think it goes back to what I've at least experienced when you do the first few things we just mentioned and you do them well, you do them right, and you guys are just kind of jiving, whether it's on Zoom or on phone, things are flowing real smooth. It's very common that it just comes out. They tell you, I've got $500,000 in bank cash right now, right? And you can sort of tell. You don't even need to specifically ask it sometimes, right? They might say, I've got a few $1,000,000 in the bank, or I've got a few $1,000,000 for this or that, and you're like, all right, you're accredited. I know based on your responses. But if not, then I agree 100%. It's not the first question I ask, when they pick up the phone. Hey, how's it going? My name's Brian from Blue Capital. Tell me how much money you have in the bank. You definitely don't want to do that. But once you get past the rapport building side and there's some sort of comfort, there's some confidence on your side, some confidence that, this isn't some smoke and mirrors, some sort of, you're not a bad guy, a bad operator on the other side too. They're thinking good things about you. You can ask the question, tell me, are you an accredited investor? And if they seem like they have no idea what you're talking about, and you make sure you have the capability of explaining what that means. And it's very common that if they don't know what it means, they're probably sophisticated. But if, you never know, there's a chance they might not. And then just asking, tell me about your liquidity. And that's super important because we talk about this all the time in the space. We don't want to take somebody's last $50,000, right? For some reason, I guess there's technically a chance somebody could be accredited but have low liquidity. Maybe they're investing in everything, right? Everything they see, they invest in. We don't want to take your last $50,000. We don't want to take your last $75,000, whatever the amount may be, whether you're accredited or you're sophisticated. Just because that's not a position we want to be in, because this is, just being completely transparent. This is an investment. There's risk involved, right? We're not trying to lose anybody's money, but there are also things out of our control. Things like COVID happen, which are hard to foreshadow. And, there's always a chance that you could get in a position where, that's your last $50,000 and things can get real tight and real uncomfortable real quick. So we definitely want to make sure you ask those questions. But I think it goes back to building rapport and being confident and just asking.
Yeah. Yeah. Well, like I said, it just comes down to being those good fiduciaries, right? Is this somebody that is in a position to where they could invest if an opportunity were to become available? And again, are you the right fit for them? I think it just falls right in line with that. And it's so important. And I would also argue that, Yeah, it's so important, Brian, that we identify those things. And you're absolutely right. You have to know those things up front, and especially like you said, being those fiduciaries. It's really really important that we establish that. And look, this comes down to your who your target investor is, right? Who's your target avatar? Because ultimately, if you're not getting this granular and you're not trying to identify these details, you may find your time spending a lot of time and effort having conversations with people that probably aren't going to be the right fit for you, that aren't going to help you grow your business, right? You want to get as targeted as you can and really identify who it is that you really are trying to engage and get plugged into your database, right? And build those relationships with. And so having these conversations and having what seems like challenging questions at first, but as you go through it and you have these conversations, it gets easier, right? I mean, it gets just to be natural, and people pick that up in your tone, and they pick that up in your flow of the conversation. They can get a sense of your credibility and experience by going through this. My daughter just fell. Hang on. Yeah, so this ties back into the conversation we're having about your credibility, right? Is having the confidence to have these conversations. And when you have that and people pick up on that, they're going to be engaged with you. They're going to respect your time and your value that you add because of your experience, right? And so you can't shy away from these questions.
I agree 100%. There's something to be said about your confidence when you talk. You can tell when somebody's been here before, especially if, and we've both had the situations, right? Maybe you're getting maybe they're testing you. Maybe they're asking you some real in-depth questions. They're getting deep nitty gritty into the details. Tell me how this works. Tell me about that. Tell me about this. Tell me about this you've done. Whatever the question may be, when you can sort of, dance in the conversation and take those questions and answer them with confidence, or at least provide some sort of resource that you have at your disposal, showing that, man, I was ready for that and I don't have the answer to it, or I have something I can give you that will give you the answer to it, right? If somebody says, well, why'd you pick Houston? Well, I'm not going to tell you every, stinking number about why Houston's a great market. Let me send you our investment offering, portfolio. Let me send you our sort of company profile, our bios, which has a nice, beautiful one-page graphic on why Houston is such a great market. And you can go, okay, well, that makes sense. And then there goes back to that credibility play where like, whoa, these guys, they had their professional package ready to go for their investors, for brokers, for, whoever they're working with. That builds that credibility so that next time you speak to them, there's just something to be said about them being prepared, and you just feel a little bit more confident as an investor. Because I know, when I'm doing anything, and a lot of people are just kind of skeptical. There's a lot of syndicators out there, a lot of real estate investors in general, that it's a very attractive space. It has high barriers to entry, but you still have to make sure you're vetting people thoroughly, and you want to be a little skeptical at first, which is okay. And being able to confidently answer those questions and have those resources, it builds confidence with your investors.
Sure, sure. And, just again, to echo what we were just saying, right? I think it builds your credibility, right? I mean, because if you're not asking those questions, then it could potentially identify you as somebody who's probably not that experienced, right? Or somebody who doesn't have that confidence, moving forward. And so, yeah, I definitely agree with you there 100%. So, and this really kind of, it's such a great piggyback off of our last recording when we talked about the 6-step framework, because a lot of these principles kind of fall into that, right? That nurturing of the relationship. Once you identify the investor thesis and you figure out if, okay, is this somebody that I'm really going to be able to grow this relationship with? This leads right into, well, how do you continue to communicate with them and nurture those relationships and keep it an ongoing conversation, right? And those go back to those kind of the six-step framework we talked about in the last episode. So, but very important. So one last thing that we didn't discuss, I think that's important that you want to try to identify is timing, right? And we kind of talked about this before the show. Is you really want to figure out, is this the right time for them as an investor? And again, everything is cyclical, everything's a timing circumstance in this industry, right? I mean, how many times do you come across opportunities and you're like, oh, man, I'm not liquid right now, but 6 months from now, I'll be there, or something like that. So the same goes for the investors you're dealing with. You really want to figure out what is their timing. Maybe they're just getting into the space, just looking to network and pick up information so that they can continue their education before they get ready to invest. So I think it's really important to establish that time frame up front as well. And if you're a thought leader like we are, and you have resources that they can rely on to help in their education, that's a perfect way to continue to build off that relationship and cement your credibility with that particular person when you can provide them your own resources that you've put together. What do you think?
Absolutely. I think that's something that a lot of operators, especially the newer operators in the space, maybe when you have a smaller database, which is why, we talk about just, this is a numbers game. It's not that necessarily, we don't want to have great relationships with people, but it goes back to this point you're making now with timing, right? If you've got 200, 300, 400 investors in your database, and let's say a very large percentage of them have soft committed 50K, you might be doing the math and going, okay, 200 times 50. Okay. You're doing the math. You're like, I can raise millions of dollars. I'm ready to go. But what you fail to think about sometimes is where everybody that's on that list that has made that soft commit is at in their life. Is the timing right for them? Maybe they're just in the educational, phase, and they really don't feel the confidence, or they don't feel comfortable yet and it's not, maybe it's not even you. Maybe it's just them. They're just not ready mentally yet. And they need 3 months. They need 6 months. Some people need another year before they can I need to really understand this business before I can commit, $50,000, $100,000 of my hard-earned money. And that's okay. You just need to know that. That's why asking that question, like, what's your timing look like? Are you looking to invest in the very near future? If I had an opportunity to present to you in the next few weeks, would you be interested and capable? Or are you more looking to, wait a few months and sort of, network and educate before you make a commitment, So asking those types of questions is really important. And the second thing has to do with the timing of their liquidity, like you mentioned, right? So some people are very active passive investors. They're investing in 2, 3, 4 deals a year. And if you catch them, on deal 3, deal 4, they might not have any cash set aside for real estate. Doesn't mean they don't have any cash in their bank, but whatever cash they allocate for specifically for real estate investing, they just might be tapped out. I've heard this all the time. I'm waiting on a refi, and it's like, okay, well, great. Well, I'll just touch base with you in 6 months or 3 months or whatever, right? So asking those questions about their liquidity, where they're at, that's really important, just so you can get a broader picture. And also to make sure that, you're not, at the end of the day, wasting your time too, because we've talked about this all the time. Time is our most valuable resource. We talk to a lot of people, both, between brokers, property managers, lenders, other general partners that we might be interested in partnering with, and then passive investors as well. Our time is very scarce. Our time is very valuable. The last thing you want to do is having a weekly call with somebody who isn't going to be ready to invest for another 12 months or 18 months, right? Not that we don't want to nurture, but there's other ways you can potentially nurture, which we talked about in our 6-step framework: having the newsletter, having a podcast, having a blog, staying active on social media, having a meetup and inviting them and meeting them in person. That's a better way to stay engaged with them throughout the process versus, needing to pick up the phone every 30 days to call them. So the timing aspect is definitely something you want to be considerate of. It really, I think it's, I've heard this before. I don't remember who necessarily said it. Maybe it was Hunter, maybe it was somebody else, but you got to assume like 10% or 15% of your database is actually ready or capable from a timing standpoint to invest, right? So, this is something to be considerate of. It's a super important point, and one of those things you want to make sure you don't forget about.
Yeah, 100% agree. And it kind of leads off into a segue off of one of our previous points we made in our 6-step framework, right? Is you want to cast a wide net. You want to have as many of these conversations as you can in the beginning while you're working on building your platform that attracts capital to you. But you really want to have these engaging conversations as many as you can, because you really can't have enough people in your database to turn to, right? I mean, we talk about it all the time. I mean, if you're just relying on the handful of 10 or 50 or 100 investors you have in your database, but you're trying to go out and take down big multi-million-dollar deals, you could find that to be quite a big barrier, because like you said, it's a low conversion rate at the end of the day. So you really want to have as many of these conversations as you can and get people plugged into your network. if you're looking to really learn how to mass scale your capital raising business. So
100%.
yeah. So Brian, I think, there's so many different angles you can take here in these conversations. And listen, again, there's no right way to do this, right? I mean, there's no one secret sauce or secret formula on, hey, you got to follow this exact script. But, the point is you want to keep it personable. You want to keep it about the investor. And this is, I think, is important. I think innately, when you go into these conversations and you're having these conversations for the first time, you almost resort to trying to sell yourself and your company or your brand. And I think that's the wrong approach, because that's where it becomes off as sales pitchy. And that could not lend very well for your credibility, right? And so you want to keep it about the investor themselves, especially on the initial call, right? Hey, who are you? What are you doing? And try, because what you're doing internally is figuring out, is this person aligned with what we're doing, and are they going to be a good fit for us, right? But it's important that you keep that focus on them at first, before trying to come off and try to sell yourself. That's the last thing you want to do, is try to sell yourself. But again, you want to continue to get granular. You want to try to identify who this person is, who this investor is, and get very specific in detail. So that way you can see, is like I said, you're trying to find that alignment.
Agreed, 100%. Yeah, those are all really important and great points, and just great nuggets for everybody to take notes on if you haven't already. You really got to know your investor. Everything that we've talked about, from the timing, the return expectations, all that stuff's really, really important. Type of assets they want to invest in, and their experience at the end of the day. This info in building that relationship is really, really important. And I think it comes down to the last thing you mentioned about not being salesy. At the end of the day, I always tell people this, whether they realize it or not, we're all in sales. It doesn't matter if you got a W-2 and you're working somewhere. Maybe you're selling your boss, or maybe you're selling your coworkers, or maybe you're selling to an actual customer. At the end of the day, we're all selling something. So we're all aware of that. You don't need to make it any more obvious than it needs to be, that they're looking for an investment opportunity. So they're trying to sell the fact that they're a good investor. And then we've got an opportunity potentially. So we're trying to sell the fact that we're the right business partner for them. We're a fiduciary of their capital. We can take care of it. We can help them, reach that goal of financial freedom and building their wealth. But there's no need to, to make it super obvious and sort of pitch yourself, like you said. Your track record, as far as how you're, some people are newer, and they're worried that, like, oh, I don't have a track record. I'm new. I haven't done any deals yet. That's okay. There are ways around that. Being educated, being able to answer questions. If you're a part of a mentorship group, making sure you're highlighting that throughout your conversation, that there are people in my corner that are making sure that I'm doing things the right way, that I'm not just here winging it. There's sort of for lack of better terms, a script that I'm following. The road's already been paved, and I'm not reinventing the wheel. I'm trying to work with other high quality operators to help me get to where I want to go, so I can help you get to where you want to go as well. And I think if you're highlighting those things, no matter what your experience is, and you're just being genuine, we talk about this all the time, right? Being genuine and being honest. We're not trying to put up smoke and mirrors. And if you're trying to attract capital and you've never done a deal before, or you've never done this before, and you're still starting out, it's not about lying. And, if you've got some single family background, or if you've built some small things, great, like highlight that stuff as well, because it's super valuable to show that you're educated, at least in real estate. But at the end of the day, it's okay if somebody asks you, like, well, tell me about your previous deals. What have you done? Well, we're still looking for our first opportunity. We're working every hard. We're having calls every day, putting in the time and effort. I'm in a mentorship group, and we're all working together to make sure that we're doing good deals and that we're finding the right people. And then I am spending a lot of my time and effort strategically aligning with high quality operators, everybody from brokers to property managers, so that when we finally have a good opportunity, I'm working with skilled partners, skilled vendors that are going to make sure that what we do is successful.
I'm so glad you brought that point up. And it's such a valid point, man, because you have to have the confidence to be transparent and tell somebody, hey, I haven't done my first deal yet. But you have to say that confidently. And like you said, but let me show you what I do have. I do have the education, and I do have these resources, and really lean in on that. But I think it shows a lot about your credibility when you can be that transparent with people you're having conversations with, and show that confidence. It's okay. People understand you're starting from zero, or you're starting from nowhere. Everybody does. Everybody
Listen,
does.
man, exactly. Everybody starts from somewhere. The guys we're all looking up to that have 10, 20,000 units, they did not, they weren't born with 20,000 units. They had to work for it. So I think there's something to be said about being modest and being humble and staying modest and staying humble, no matter how big you grow. Even when you get to 5,000 units, just letting people know, like, yes, we have a great track record, but we operate hungry. We're always hungry as if it's our first day. It's super important. We exceed expectations. We sort of under promise and over deliver, for lack of better terms. And I think staying humble, being honest, being transparent throughout the whole process, whether you've done a deal or you haven't, people recognize that. They pick up on that, whether you realize it or not. And it shows them that you're genuine and that you're owning who you are, no matter how experienced you are. And people ultimately, it goes back to Dan Hanford, know, like, and trust. They're going to like you and they're going to trust you a little bit more if you're always being transparent and not making them feel like, oh, this guy's got something he's not telling me. So I think it's super important.
Yeah. 100% agree. 100% agree. Man, this has been good, Brian. I think this is hopefully going to be very, very valuable to those who are trying to break through the mindset of how do I have these conversations, and listen, again, it's not difficult. It's not, you don't have to go in there with a prepared presentation or script. You just, you want to be personable. Like you said, you want to be transparent. You want to be genuine. And you're really just trying to find out who that person is. You're taking them on a first date, so to speak. This is something that is a skill, and it's just something that you have to do over time. And the more conversations you have, the easier the conversations get, the more comfortable you get, right? And I think the more confident you get in that. It's just like anything else we do. The more the experience that you gain, the more confidence you have. So get out there, continue to have these conversations, go through and formulate your own internal script in your head, or at least the questions that you want to answer. But don't go in there with a predetermined script out the gate, because that could alter the perception that you're trying to give off. So hope this helps. Anything else that you think that we didn't discuss that may be important for people to pick up on?
No, I mean, I just want to highlight everything you just said a little bit more. Like, don't be nervous. Go out there, be confident, know what you're going to ask. So, if that means you need to literally print out a sheet of paper of the questions you're going to ask, that's okay. But don't get mad at yourself or feel like you have to stick to the script and go in an order, for lack of better terms. I've seen this question asked a million different ways. I've seen the other opposite end is, does somebody have a seller script? So that when I'm cold calling a seller, I can have my script like, hello, I am a buyer. I am buying properties in the area. Like, we've all heard that before. And it's the same thing with you're attracting capital. It's like, these guys they've worked hard for their capital. They want to protect their capital, and they're going to be careful about who they give it to. And it's the same thing when somebody's selling a property, right? They got to be careful about who they sell to or who calls them. So building trust, building rapport, being genuine, going through it, letting it naturally flow. There's just something to be said about that. And I think at the end of the day, you just have to practice, just like anything else. If you're not out there and you're not having, a call a day, set a goal for yourself, right? I'm going to have one investor call a day, or I'm going to have, 5 a week, whatever the number might be. Maybe you're busy and you need to knock out all 5 in one day, but set a goal for yourself. And you're going to notice over time that you're going to go from, getting nervous and having your script in front of you and having sweaty palms or whatever, and having your pen ready, to all the way down to, 3 months later, 6 months later, you're just going to be picking up the phone and letting it naturally flow, plugging in your notes after the fact, and then going from there. But practice makes perfect. There is no such thing as perfection, but just get as good as you can, get confident. And if you're not out there doing it, you're never going to get good at it. So it's okay if you mess up the first few times, or you mess up the first few calls. Don't dwell on it. Just move on to the next one.
That's right. If people pick up that you're genuine, they're going to call you back.
That's right.
They're going to call you back. So I agree, man. Well, listen, great conversation, Brian. I know this is going to be very, very valuable for those who are listening and tuning in, hopefully. And I know these are some of the very core principles that we follow that worked very effectively for us. So, always continue to build on this skill set of having these conversations and relationship building. it's very, very important. But anything else before we kick it off here?
No, there's some other things that, I think are important. I don't want to detour too much, but, just make sure you're in an area. If you're on Zoom, make sure, you don't look like you just woke up. If you, have a good microphone, have a good lighting. If you're on the phone with somebody, make sure you're in an area that's somewhat quiet and doesn't have a ton of background noise and things like that. Just make sure that you don't have the opportunity to have the call interrupted. Those are all little things. I hate to call it common sense, but you don't want to be like on the treadmill having an investor call, right? So those are all the little things. Just be professional throughout your conversation. Show people that you're in this, you're trying to be in this business a long time, and that's going to go a long way.
Yeah, 100% agree, man. It's so important. It's the little details that people pick up on. You're absolutely right. So, all right, buddy. Well, really enjoyed the conversation, and look forward to doing this again here pretty soon. So we'll talk to you later. Have a great weekend, everybody.
Yeah, great call. Thanks, Cody.